The central organizational object in logistics is the plant. A plant is an operating area or branch within a company. A plant can be a central delivery warehouse, a regional sales office, a manufacturing facility, a corporate headquarters, or a maintenance plant. A plant must be assigned to a single company code. However, one or more plants can be assigned to the same company code. Some of the plants included in IDES Company Code 1000 Germany are 1000 Hamburg, 1100 Berlin, 1200 Dresden, 1300 Frankfurt, and 1400 Stuttgart. All company code relevant transactions from these plants are posted in company code 1000 because these plants are assigned to company code 1000.
In order for the procurement process to be used in materials management for a vendor, the vendor master record of that vendor must have the purchasing data. The purchasing data is specific to a single purchasing organization, just like the company code data of the master record is specific to a single company code. In the same way that several company code segments of the vendor master record can exist, there can be several purchase data segments of the vendor master record. Every purchase data segment presents data which are specific for exactly one purchase organization. You can access purchasing data of vendor master records in accounts payable accounting with the central maintenance transaction codes XK01 to XK03. The procurement cycle is as follows. Demand determination. The department responsible can register a requirement for materials manually via a purchase order to purchasing. Determining the source of supply. The purchaser responsible is supported by the system in determining possible sources of supply. One possibility for determining the source of supply is creating queries and subsequently entering the quotations. Furthermore, you can access purchase orders and conditions that already exist in the system. Supplier selection. Comparing the prices in the different quotations makes selecting suppliers easier. Letters of rejection can be sent automatically. Purchase order handling. When creating purchase orders, the system provides you with the entry process. Purchase order monitoring. The purchaser can monitor the processing status of the purchase order in the system. For example, the purchaser can determine whether the goods or the invoice have been received for the corresponding purchase order item. Dunning processes are also supported. Goods receipt. The system checks the amount of goods received against the purchase order quantity. Invoice verification. The vendor invoices are checked to see if the accounting and the content are correct. Payment processing. The vendor payment is usually done in financial accounting. The three-step verification, commonly referred to as the three-way match, is the standard procedure for posting procurement transactions in materials management or MM. The procedure is as follows. Purchase order. Create a purchase order in materials management or MM. Do not make any postings in financial accounting or FI. Goods receipt. To update the receipt of inventory or consumable material, generate a material document in MM. At the same time, create a document in FI that posts the value of the goods to the merchandise account as a debit and the goods receipt or invoice receipt or GRIR to the clearing account as a credit in the general ledger. Invoice verification. Post a vendor invoice in MM using invoice verification. This automatically generates a document in FI. The accounting document contains the invoice amount that gets posted to the GRIR account, that is debit, and the vendor account, that is credit. The last two steps can be completed in reverse order depending on the order the goods and the invoice are received. The goods receipt or invoice receipt clearing account ensures that goods were received for each invoice and vice versa.
The purchase order screen has several subdivisions: type of document and vendor, header data, position details, item details. Year-end closing can be divided into two main sections: legal requirements, that is, procedures required by the government authorities; technical and organizational requirements, that is, procedures that are technically required or needed to support the accounting organization. At the beginning of the fiscal year, the balance carry-forward program is run, carrying forward the balances of the vendor accounts to the next fiscal year. The posting periods of the old fiscal year are blocked, and the special periods for closing postings for fiscal year-end adjustments are opened. Afterwards, the balances with selected vendors are confirmed. The foreign currency documents are valuated and the accounts payable are regrouped according to remaining life required only in certain countries. Once complete, the special periods can be closed. The program for creating balance confirmations also creates reply requests for a freely definable number of vendors, a reconciliation list, and a results table. The balance confirmations and reply requests are sent to the vendors. The lists are used as a control measure. The vendors check the balance information they receive and send their replies to the Control Center Audit Department, which compares the replies with the reconciliation list and enters the results in the results table.
A foreign currency valuation is necessary if vendor accounts contain open items in a foreign currency. The amounts of these open items are translated to the local currency at the time they are entered using the exchange rate that is valid on the posting date. The exchange rate is probably different at the time of closing and open items need to be valuated again. A program valuates the open items using the new exchange rate and enters the valuation difference in the valuated line items. It creates the valuation postings in either of the following ways: expense from foreign currency valuation to balance sheet adjustment account, balance sheet adjustment account to revenue from foreign currency valuation. Note, a valuation document cannot post directly to the payable account because reconciliation accounts cannot be directly posted to. For this reason, postings appear in an adjustment account, which is displayed in the balance sheet item of the associated reconciliation account.
A valuation method determines how the individual line items are valuated. This has to be set up in conjunction with the country's specific valuation regulations. It defines, for example, whether the lowest value principle or a general principle has to be used for valuation. Valuation areas are used in financial accounting for closing operations. You can use them to depict different valuation approaches or accounting principles.
Accounts payable and receivable have to be listed separately in the balance sheet. As it is possible for some vendors to have a debit balance, these accounts need to be changed to vendors with a debit balance prior to creating the financial statements. In many countries, it is also necessary to group accounts payable in the balance sheet based on their remaining life. Both regroupings are carried out using a special program. At the same time, these regroupings are removed on the first day of the next period since regroupings are not necessary for daily processing. The figure displays how payables with long remaining terms were posted to adjustment accounts separately so that the balance sheet could be prepared. Additionally, vendors with a debit balance are regrouped. An adjustment account is used as the offsetting account here as well, since adjustments cannot be posted directly to a reconciliation account.